Morning, everybody. Thanks, Adrian. Yeah, interesting markets, aren't they? I mean, I think we were talking on Monday, the sort of state of flux we're in, and is there a trend change happening? And clearly, the market looks like it's topping out, then the risk on trade then persists again. Are you all happy with my terminology? Do you understand what risk on means, everybody? Don't worry, Sarah. A no from David, a yes from Steve. A no, a few no's and a few no. Okay, risk on. You'll hear about it in the press. A lot of economists, commentators talk about the risk on trade. Risk on is where investors, traders are putting money to work. More importantly, risk off basically means that investors and traders take money out of riskier assets. Riskier assets are deemed to be equities, some certain currencies, certain bonds, and they put them into core safer assets such as US Treasuries, German bonds known as bunds, and UK gilts, would you believe it or not? And what obviously central bankers and governments are wanting to do is to encourage investors and the market to put their money to work rather than put it into less riskier assets, which doesn't really help the economy at all. So at the moment we're engaging in risk on, or we, the market is. So equity markets are recovering, core bond markets are coming down. The dollar is coming down as well, is losing value. We've had the complete, the rally in the dollar or the fall in the euro in May has been completely reversed, as we all know. So risk on is still in vogue at the moment. And the question is, will it continue? And I think what we're seeing. That's okay, David. Yeah, no problem. I hope if you do get stuck on any terminology, please just stop me because, it's quite difficult trying to hold myself back from using terms that sometimes not everyone may be familiar with, in which case listening to me may start to become rather confusing. But we're in a state of flux at the moment, and I think we mentioned that before. If I go to daily charts and we just look at, let's get back to Agent's favourites. So if we look at, for example, just the FTSE, for some reason we've lost our. If we look at the FTSE, I mean, we are sort of a little bit choppy over the last month. We've hit the top of the envelope, come back down, rallied, come back down. And this is where we were on Monday, looking like, we were going to continue in this vein. We talked about the pennant. Do you remember I drew those trend lines on here? I'm not a great fan of trend lines, but for the time being, the market has definitely had 3 very good days so far this week on the FTSE. And here we are approaching the recent highs. Quite interesting. And if you sort of drag across the whole year, you can see we're approaching the highs for the year. So, we've gone from the middle of the year, the lows of the year, all the way back up to the highs again. But now we've got to ask the question, what's going to, move the market even higher from here? Yeah, don't worry, David. David's saying a lot of the jargon sometimes can be a bit misleading or isn't understood completely. So please, everyone, do stop and ask me. I'm very happy. I enjoy explaining it more to the point. So do ask me. The question is, what's going to propel this market even higher now? Let's leave that for now. I'm going to go on to my bit talking about the markets. That's it. We had this. Okay, we got all my. That's brilliant. Good. Okay, we lost all these earlier on. Okay. Let's just talk about what's gone in the market very quickly, because I know you want to get back to the markets. I know the euro, the dollar's starting to pick up again, and stocks are sort of a bit in two minds this morning. What's happened overnight? Well, you've probably heard about the Chinese data. And I think generally, what's going on with China. We had some good stats yesterday in the US on housing starts. And I think the markets, investors are fairly sort of optimistic about the global economy for now. and China's economy has grown largely in line with expectation. I put this headline up there: China's economy expands 7.4%. That's in the third quarter. That's from a year earlier. And this actually does mark a slowing for the seventh consecutive year. But the China's premier, this chap Wen Jiabao, who actually is soon to be the ex-premier, said on Wednesday night that the Chinese economy had started to stabilise and that he was confident that the country would meet the government's full-year growth target of 7.5%. Now, China's had stellar growth, really, and it needs pretty strong growth just to maintain its economy the way it's set up. Obviously, 7.5% would just look extraordinary in any developed Western economy. We're struggling to get out of recession, obviously, but there has been a concern that there may be more of a hard landing. Siva, I will do that in a second. Siva will look at the 50, 60 and 240. Don't worry about that. There had been concern that we were going to be having a bit of a hard landing in China, but I think some of the data is suggesting that perhaps it's not going to be quite so bad. I know that investment retail sales, just looking at the article here, retail sales, industrial production, all accelerated at the end of the quarter. And that's why this chap, Wen Jiabao, said that he probably expects the worst is over. So there is a bit of optimism in China as well. So it's funny how it all sort of builds up together, isn't it? And obviously we had a rise in the Dow overnight. U.S. housing starts. I don't know whether any of you followed that. We mentioned this on Monday, some of the key bits of data that were expected. The ZEW in Germany was more positive than was expected, so that's a leading indicator. That's good news for Germany. Still in negative territory, though, which basically means the sentiment is still negative, but not as negative. Steve, only a couple of years ago, I was reading of the danger of China continuing at 10%. Yeah, isn't it weird? Yeah. Well, the problem, what Steve is talking about is China is growth being too high and unsustainable. And of course, there's always this delicate balancing act in China. Do they pour cold water on it to try and dampen down inflation? But when you pour a bit of cold water on it, you're going to put the fire out. And there was a concern that perhaps I had poured too much cold water on it. But I think 7.5% is now more realistic. China's been growing for 20 years. It's the second biggest economy in the globe. And I think what they've set now in China is more realistic. As I said to you on Monday, there are certain concerns over the data that is published by the central Chinese government. But for the time being, the markets believe it, and they're relatively optimistic about the outcome for now anyway. Okay, going back to the data. So we've had some decent data, but the surprising data really was the housing starts yesterday at 0.87, which was pretty extraordinary, really. 15%, surging 50%. So that's the highest level in 4 years. Why do we care about housing starts? Well, building permits are a real leading indicator, which is the one before that bit of data yesterday. But the housing starts, that's actually, where construction has begun. And as I said, it's the fastest pace in 4 years. So that's since July 2008. And obviously, it's exceeded all forecasts. And I think it's now no longer a question of whether the housing market is rebounding in the States. I think it probably is. And it certainly has bounced off the bottom, and I think we're in a period of recovery now. So, but it's not surprising with record low mortgage rates in the States. And this does have a big effect on jobs, if you remember. Roger, does that indicate non-farm payroll will be good? Interesting. Roger, you have just taken the words out of my mouth. And I was going to say improving demand also helps revive the jobs market, because as we've stated before, for every one house that is started, up to 5 people are employed, albeit temporary. But if they can sustain that, it will be very good for the jobs market. So, Roger, yes, you have hit the proverbial nail on the head, and I think things certainly look more optimistic in the States than they do in Europe, but things are starting to improve. What's interesting, actually, I think, Siv, you were just asking about 15, 16, 240. Is that on FTSE? Okay, well, what I'm going to show you here, we were looking at this earlier on, actually. There's quite interesting levels on the FTSE. This is the 240 on the FTSE. So you can see we've recovered all the way back from the 17th of September, where we put in this pivot here, euro-yen. Do you mind if I just hold back on euro-yen for a second? I just want to show you the FTSE, the way that, you know, we've been making higher highs on the 240, and we're coming into this zone here. So we're at real critical levels here on the FTSE. But what's interesting is if we crushed our chart up and look at the daily, we can see where we are sort of in relation to the year's range. We're still a little way off the top of the market, but, you know, anywhere up to sort of 59.67 is the top of the pivot, the top pivot on the FTSE there. So I did hear Adrian's comments. I think in the short term, I think there is a, you know, we're the rubber band's pretty stretched at the moment. So I think we're probably more vulnerable to a bit of a pullback before making another move higher. What's interesting, and I wanted to do this, unfortunately I can't put both charts up very easily right now because it takes a bit of a while to do it, but it's interesting to compare this with the Dow Jones, and I'm just looking for, let's just put up the Dow control. Okay, I know this is not the symbol you use. You've got one for US 100, but let me just put up. This is the Dow, and compare the Dow with that on the FTSE. You can see we've eclipsed the year's high. Look at these strong pivots here. Now, we broke that in early September, so you can see how much more optimistic, how much more positive, and obviously in the light of the US election that's going to take place in the next 3 weeks, you can probably see why. You know, the government, Obama, there's always a suspicion, and the markets tend to react quite positively in the run-up to an incumbent. So Obama's only been in 4 years. He's trying to stay in for his final 4 years, and the markets have responded quite positively. But go back to the 240. Now, this is interesting because you can see... Okay, that needs refreshing. Okay, you can see here, look what's happening on the 240. You know, we've literally gone from top of the envelope on its pivot right back down to the bottom of the envelope, touched it, back up to the same pivot, back down to the key support from where we broke out at the beginning of September. So we're not in quite such a bullish mood in the short term as we are in Europe. Now the question is, you know, with the markets continuing to gyrate, this risk on trade, will it extend further? You know, is this going to lead to further gains in equities and commodities? You know, and what has changed? And I think, well, as we've always tried to mention in these workshops, a lot of what happens here is down to, well, the pendulum swinging too far one way. So the breakup trade of Europe that was all pervasive in June, that has been completely reversed. So no one now expects the euro to break up, not for now anyway. So the market is more optimistic. Optimistic that the Euro Troika, you've heard this description before, that's the ECB, the EU Commission and the IMF, seems to have saved the day. Have things changed much in Europe? I'm not. Actually, I think if you look at current conditions, so what's actually happening right now, I think probably not much really. You know, if you're living in Spain or Greece or Italy or Portugal, if anything, things sort of continue to deteriorate really. But actually, it's optimism, and that's based on expectations. And because we've had some leading indicators that have painted a slightly more positive picture, I think the markets have grasped on that sort of positive side of things. But we have been here before. I know, and you're probably all thinking, you know, we've been here twice before, recently. You know, the question is this optimism enough on its own to propel the risk-on trade, i.e. further gains in equities, bonds coming off, further? I'd probably say no. Roger, if Spain takes bailout, will this move the euro higher? Do you know, Roger, that's what the markets are expecting. We've got this 2-day summit today, starting today, the EU summit, and this could actually sort of precipitate Madrid's request for aid. Now, ordinarily I'd have said yes, but because the euro's run up so far, I'm not sure that it's necessarily going to propel it further, Roger. So I think that was the initial sort of perceived wisdom, but because the euro has made such gains over the last couple of weeks, I'm not all that convinced it will. But, there are also reports that an agreement is closed between Greece and its lenders for this next tranche of bailout monies. So, there may be other things that propel the euro higher, Roger. Yes, but, as I was saying, we have been here a couple of times before, and the question that is optimism enough to push the market higher? I basically, my own view is that optimism is sort of an emotional state, and it can change quite quickly. People going from being sort of overjoyed to being pretty depressed pretty quickly, and the markets react to market moves that feed on themselves. We are at the top of the most recent trading range, so I actually believe there is increased risk that should we get some sort of negative news, or the first sign of any negative news, we could have a sort of a disproportionate effect. I'm not calling them top in the market. I'm just saying I think there is an increased risk of a move, back down again. I don't mean significant move back down, but I'm trying to find reasons to buy the market, and like it was difficult finding reasons to sell the market that weren't already in the market back in late May, early June. I think we're in the opposite situation here now, where there's a lot of optimism built into the markets, and I'm struggling to find real reasons to buy the market from here for the risk on trade. Anyway, I have waffled on for a long, long time. I hope it's been useful. I will finish off quickly by just checking the data that we've got coming out. Well, as I said, in answer to Roger's question, we have got this EU summit starting today. Retail sales in the UK coming out in approximately 45 minutes for all you sterling traders, FTSE, if you trade gilts, anything to do with the UK, retail sales, that's an important number. Philly Fed manufacturing, we mentioned this on Monday. This is the more important bit of data. That's one sort of slight negative spot where manufacturing has been pretty good in the States. I did note that this Empire State, which is the New York Federal District, that was worse than expected, although it's a smaller state in terms of manufacturing. But I don't know, it could be a problem here if we get a poor manufacturing, Philly Fed manufacturing index this afternoon at 3 o'clock. Remember, we got the regular unemployment claims, Roger, so that might be interesting to see if we do see a gradual improvement, so a lower number in unemployment claims if this housing permits, housing starts number is going to percolate into an improvement in the jobs market. And then we got our public sector borrowing requirement tomorrow in the UK. CPI, I'd forget CPI, that's Canada, I apologise. And then existing home sales. Not so important as housing starts. These are all linked. Building permits means when someone effectively gets planning permission in UK jargon. Housing starts, well, that's when you break ground, and that's when you start to build the house. Then obviously existing home sales, that's ones that have already been built. That's house sale transactions effectively. But they all are important in terms of the health of the housing sector, which, as we've already discussed with Roger's question regarding labour, etc., we know is vital to the US economy. After all, let's face it, it was the housing market that brought this whole market crashing down on itself back in 2008 with the collateralized debt obligations, etc. So it needs to recover. Anyway, listen, thanks for listening. I hope it's been helpful. Good luck with your training for the rest of the week. Enjoy the weekend. David, very useful. No problem. Okay, I'm glad it's of help. Siva, I didn't look at Euro Yen, but I will send you my thoughts on it if you wish. In fact, I'll ask Adrian to look at Euro Yen. That'll help. Roger, no problem at all. And I look forward to catching up with you again on the Monday. Thanks very much.